When SGX hits the pause button, don't panic. Use this playbook to protect your capital, avoid costly mistakes, and turn trading halts into an investing edge. In today's video, I'm breaking down what actually happens when your stock shows halted, why SGX pulls the brakes, how circuit breakers work, and the exact steps to take so you don't get trapped. This is adapted from my latest in-depth Substack deep dive on the Investing Iguana. I'm Iggy, Singapore-based market analyst and creator of the Investing Iguana. I help Singapore investors cut through noise with clear frameworks, SGX first data, and practical steps you can act on today. In this video, we'll cover what a trading halt is, why SGX halts the market, real cases and what we learn, what happens to your money during a halt, smart moves for everyday investors, including CPF/RS angles, the bigger picture for SG portfolios, and finally, a one-page survival kit you can use the next time the tape freezes. Let's go. Imagine hitting pause on a video game. The screen freezes. You can't make your next move. That's a trading halt. Orders wait. Matching stops. The goal is fairness and order, not punishment. There are three key states: company-specific trading halt. One stock pauses, usually because material news is coming or trading looks abnormal. Market-wide halt. The whole SGX stops, usually a technical issue or extreme volatility. Circuit breaker. A short cooling period if price moves too far, too fast. And here's the big difference. Halt versus suspension. A halt is temporary. A suspension can last weeks, months, or even years. That matters for liquidity, stress, and your options. A visual summary of these. Scope, halt, and suspension are single stock. Circuit breaker affects a single stock or basket. Typical duration. Halts can be 30 minutes or more than 3 market days. Suspensions can run for weeks to years. Circuit breakers pause for 5 minutes. Orders, halts often keep orders live. Suspensions typically lapse unmatched orders. Circuit breakers allow orders within the price band. Your action: wait for updates during a halt. Track restructure risk in suspension. Reset orders within band during circuit breakers. If your largest position went into a suspension today, could you afford to wait it out? Halts are safeguards. First, technical failures. Systems, power, network, or storage failures can trigger a market-wide halt. Rare, but they happen. When they do, the entire market pauses. Second, major announcements. M&A, restructuring, audits, investigations, financing. SGX pauses trading so all investors can process news together for a level playing field. Third, volatility control. Circuit breakers limit extreme moves and give traders time to think, preventing panic spirals. Fourth, compliance and distress. If a company breaches rules or faces going concern risk, SGX can suspend trading while issues are sorted. SGX commonly uses a plus 10% price band from a reference price. If an order would trade outside that band, it's rejected, and a 5-minute cooling off period kicks in. You can still trade inside the band, and after cooling, the band resets from a fresh reference. If your limit order sits outside that band during a fast drop, do you have a plan? Market-wide technical halts stop everything, often from a single point of failure. The reopen is staged and cautious. Company-specific suspensions tell a different story. Slow burns like distress, investigations, or restructuring, trapping capital and testing patience. In market-wide halt scenarios, pain is zero trading. Lesson: keep emergency cash and diversify assets. Delays from software or ops mean uncertain reopen timing. Lesson: use staged orders and avoid chasing on reopen. Company halts for material news mean price gap risk at reopen. Lesson: size positions accordingly. Company suspensions for compliance or distress mean trapped capital. Lesson: avoid weak balance sheets and heed watch lists. If the market reopens after a halt and spreads are wide, will you chase or patiently scale in as liquidity returns? Let's cut through fear with facts. Your shares still exist. Ownership doesn't vanish. During a trading halt, you usually can't trade the counter, but existing orders stay queued and you can often modify or withdraw, matching resumes when the halt lifts. During a suspension, unmatched orders lapse. Trading can be frozen for months, maybe stuck until a restructure or delist. During a circuit breaker, you can place orders within the band. After the cool-off, the band resets and liquidity improves. The psychological cost is big. Investors rush when trading resumes, sometimes chase, get poor fills, and mistakes compound. The playbook, market-wide halt. Stop placing new orders in the first 15 minutes, check notices and brokers in the next hour. Stagger limit orders and avoid market orders after reopen. For company-specific halt, read announcements, reassess thesis and position size, expect gap risk at reopen and trade small. Suspension, accept illiquidity, track restructure milestones, prepare for all scenarios. Circuit breaker, reset orders within band, let liquidity recover, avoid chasing spikes, and let spreads compress. What's your first 15-minute rule when the tape stops? Preparation beats panic. Don't panic at halted. Find the reason first. No halt versus suspension. Timing matters. Avoid trading into a halt or right at the reopen. Let spreads tighten. Watch SGX watch lists and early warnings. Keep cash buffers. Market-wide halts can freeze plans. Diversify by sector and size. Limit single stock concentration. Treat suspended stocks as capital at risk. Outcomes are binary. CPF/SRS investors. Liquidity matters, so avoid thinly traded or weak balance sheet names. For income, prefer diversified REITs and blue chips with cleaner disclosures. Build slack into rebalanced timelines to manage halt risk. Stagger CPF/SRS entries. Reduce timing risk. If a CPFIS position gets halted before your planned switch, does your portfolio still hit your targets? For full charts, checklists, and the playbook, get the Substack post in the description. Now let's zoom out. What does all this mean for SG investors long term? Two truths. Systems can fail or overload, so build for resilience. Weak companies face long suspensions, not quick fixes, so focus on governance and cash flow quality. Your strategy, embrace quality and strong balance sheets to reduce risk. Use preset rules for sizing, price bands, and staged trades. Keep dry powder. A cash buffer helps you win at volatile reopen. Portfolio resilience checklist. Position sizing. Max 5% per stock. Liquidity filter. Minimum median daily value, 500K. Balance sheet. Keep net debt and leverage conservative for non-REITs. Dividend quality. Use multi-year free cash flow coverage. Event risk buffer. Hold 10 to 20% cash or short duration T-bills. If you applied this checklist now, which positions would fail 2 or more? Put it into a one-page routine. Diagnose, identify the halt type. Verify, read the official notice. Reprice, update your fair value range. Execute, use staggered limit orders or stand down if spreads are too wide. Review, check your rules and adjust filters and buffers as needed. This is the muscle memory. Diagnose, verify, reprice, execute, review. 5 steps, even when the heart rate spikes. My personal take, the edge for SG investors isn't predicting halts, it's preparing for them. Keep sizing tight. Favor quality balance sheets. Maintain a cash buffer. For CPF or SRS, reduce exposure to thinly traded names and yield traps. Plan rebalances with slack. If a counter goes halted, treat it like a fire drill. Follow the checklist, not emotions. Actionable takeaway. Before your next trade, run the checklist. Position size, liquidity, leverage, dividend cover, and cash buffer. If 2 or more fail, scale down or pass. If you only cleaned up positions that fail the checklist, would your portfolio be safer or riskier? Let's recap. What is a halt, and why is it different from a suspension? Why does SGX halt? Technical issues, material news, volatility control, compliance. Real cases, 2 patterns, fast market outages versus slow company suspensions. What happens to your money? How to act in the first minutes, next hour, after reopen. Smart moves for everyday investors. CPF/SRS nuances. The bigger picture, quality, rules, cash buffers win. Your survival kit. Diagnose, verify, reprice, execute, review. Take these lessons into your SG investing journey. Build resilience, keep optionality. When halted appears, you'll be ready. If this video helped, like, share, and subscribe to the Investing Iguana. For full charts, tables, and checklists, get the Substack Deep Dive. For member-only screeners, portfolios, and research notes, join the premium membership on Substack.